do you do with a company that reports a mixed quarter thanks to an overall lousy environment, yet its stock goes higher, as I talked about at the top of the show? That's the question when it comes to AGCO, the third largest maker and distributor of agricultural equipment in the world, with a stock that's been hammered lately, down 25% year to date. Most crop prices have slammed this year. When crop prices are down, farmers spend less money on equipment. However, in the past few weeks, corn and soybean prices have both begun to rebound, in part because high meat prices are causing greater demand for corn and soy to feed livestock. Now, when AGCO reported this morning, the company posted a 9-cent earnings beat. That's off of a 62-cent basis, with higher than expected revenues that still fell 13% year over year. However, even though these numbers beat expectations, AGCO still saw some softening equipment demand across all major geographies. And while management maintained its full-year guidance, that implies that the sales and earnings next quarter will be weaker than the analysts have been forecasting. In response to those mixed numbers, AGCO stock rallied 62 cents or 1.4%. You know what? That got me thinking. Perhaps AGCO stock has come down to the point where there's nowhere to go but up. And maybe that full-year guidance is conservative, given that this company's managed to report 2 consecutive earnings beats in a very tough environment. Meanwhile, the company's right in there consistently buying back its own stock. Last December, AGCO announced a $500 million repurchase program, pretty substantial for a company with $4.2 billion market cap. In the first 9 months of the year, they bought back 6.4 million shares, 7% of the share count. And on the conference call, management made it clear they plan to continue their aggressive repurchases. So where exactly does that leave us? I think that if crop prices keep falling, AGCO will keep being difficult to own. But if their rebound is for real, then this is a bottom. Let's take a closer look with Martin Richenhagen. He's the chairman, president, and CEO of AGCO. Find out more about the quarter and where his company's headed. Mr. Richenhagen, welcome back to Mad Money.
Hi, Jim. Thank you for having me again.
Okay, I got to get right to it. You're buying back stock. You're also plowing money back into the business. You're spending a lot to make the company, you've got the CapEx expenditures going higher. Why bother?
Well, I don't think that you should. We are hanging in, so we still have a great story to tell. Growing world population, changing diets, renewable fuels, and everything is still intact. We call those the fundamentals are still there. And then we do the right thing. So we not only buy back shares, we also do a very radical and very quick re-engineering of our business, which is healthy and which will help us to reduce costs substantially.
All right, where are inventories right now throughout the world?
Inventories for some of our competitors are very, very high. In our case, they are reasonable because we manage them early enough. So we have big and professional dealers in most of our markets, and therefore I think we are doing better than some of the other guys.
Have you been able to manage down inventory in that Ukraine situation?
Yes, but what we did not plan for when we talked last time, we don't have a problem in Ukraine, but we have some I would call it collateral damages. Like, for example, I don't know whether you heard about it, but Dutch vegetable farmers lose about 350 million in sales because they are sanctioned by Russia. Spanish orange farmers, the same. Polish potato farmers. So that means we have quite some impact from sanctions from Putin, which hopefully will be discontinued sooner or later.
All right. Now, on the other side, I am seeing some crop prices come back. You are in a cyclical industry. Is it possible that we could be at a trough? And are you even factoring that in for 20-15 years?
Now, we are very conservative because I think there's nothing wrong to take now very conservative assumptions in order to make sure that you do the right steps and change things properly. And then if basically business does better, as some of our guys say, it will rain through the roof. So that means we think it's nothing bad to be on the safe side.
Now, Latin America just had a big election there in Brazil. Huge business for you. You okay with the politics down there?
Well, actually, we are happy that the election is over now. Maybe the president can be discussed, but I think overall they can go now back to work. And Brazil, I think, has also some potential to come back.
Well, I got to tell you, you hang in there. And I just feel like when you get a stock down so low to its intrinsic value, it's when people have to start buying it. And Martin, that may actually be the case with what we've seen with AGCO. Great job in a very tough environment.
Thank you very much, Jim.
Okay, that's Martin Richenhagen. He's the chairman, president, and CEO of AGCO. Hey, listen, what goes down maybe must go up. Mad Money's back after the break.